Welcome to Trading Lounge and the European Indices for the 11th of February. I'd like to start with the S&P though, as it's a bit of a driving factor with all of these global indices, and we've been looking at from the Christmas low area through here. We're looking at an impulse wave to the upside. We consider the impulse wave to the upside completed, and what we do have here as a first little bit of evidence is that the move from the high here down to the low here is in 5 waves. So we're looking for a corrective rally, and then 3, 4 and 5 here for the A wave, the B wave, and a C wave here for either wave B or wave 2 here. And the same with the top here as wave 1 or wave A here. So this is pretty much the same sort of thing that's going on in Europe as well. Okay, so just to highlight this a little bit within here, with this market we do have a reasonably nice 5-wave structure to the downside here. So we're looking for a rally into this box here, and then looking to short. We're going to be shorting this if it locks under 2700 or takes out a new low here. And we'll trade that lower. So this is the same for the European markets as well. So for the DAX here, we've been looking up as wave 1 or wave A, and looking back for an A and a B and a C for wave 2 here. And let's go in and explore that for a moment. So with this particular market, it's a little bit different here. There's a couple of things we've got to be a little bit mindful of here, because we can count from the low, Christmas low here. We can count 5 waves up to this point here actually, and having wave 1 here, and then this would make an A wave here, a B wave in here, and a C wave here for wave 2. So in this case for the DAX, it's possible to have a low in here already. We just need to be mindful of that. Otherwise, we'll experience an ABC rally here for this market, and then down again here. So let's just give this one some time to climb, basically, and let's see what it does over the next session or two at the 11,000 mark here. So yeah, the main point, yeah, so I mean we can look at this as a B wave up to here and 5 waves for the C wave down to this point, and it can move up from here. So you could go long, otherwise we'd be expecting this market to, well, perhaps not even pull back up. You know, if it was going to be an A and a B wave here, it may just come back to the 100 here, because in a way it's got to sort of pull back in with the other global markets as well. So we just need to be a little bit mindful of that. But if we can see a clear corrective move within here, then we can look to short this low, or we can look at it as an A and a B and a C, and then we can short this this particular line through here. But we still need that second low in. We've got the first low in, we need a second low in. Okay, that's what we need. And then we can also short that second low here. Would also be critical for another move to the downside here as well here. So I'll just highlight that there as well. So a little bit of caution with all of this here. And the CAC is much the same as well. I've got it labeled slightly differently in that we do have an impulse wave to the downside. We're looking for an A and a B and a C to the upside here. You could look to short it in this box, a bit higher risk. So if it's going to be higher risk, then less is more. So a small position within the box here. And then once it locks back under the 5,000 area here, then we can also look to add shorts as well, and then taking out the low here. And this is the same for the FTSE as well here. So with the FTSE, we noted that we possibly have a high in place here. And looking for the first impulse wave to the downside, which we have. So also looking for it to move back up into this box here. So you may already be short at the moment. If that's the case, then we'll need to just keep the stop out of the way somewhere up above. You could probably put it there, but let's just put it up there, keep it out of the way. If you're going to short in this box here, but don't put a full position in here, just put something smaller in this one here. Yeah, I mean, if you're stressing out about a trade, then you've got too much money in the market, and you just can't do that. So it'll catch up with you at some point. It'll catch up with you. So yeah, yeah. So look, possibly looking for a nice short trade to come into play here. So the current moves up through here. This is what I don't know. I don't know if this is just going to move straight up into this box here and then come straight down. Otherwise, if it doesn't move up there, it can move up and then for an A wave, then a B wave and a C wave here. This is something that we're just sorting out with the US as well. It's a little bit tricky to establish it at this particular stage. We just need to see a little bit more maturity there, and one more session will give us that. So we'll know very shortly. And of course, this is the same for Italy as well. So with Italy here, we've been counting the 5 waves up, and we pointed out that the market was starting to creep to the upside. So when a market starts to creep, what I mean by that is that it gets overlapping wave structures. So this, like in this move here, it's strong and powerful, isn't it? These lows aren't overlapping, but when we get to the previous high, but this one makes a new high. This one here just starts to overlap it at this stage here, and then these ones here are all being overlapped by this one, and then this one here. These have been, so it's starting to curve, it's starting to creep, it's starting to give overlapping wave structures, but we knew that anyway. So hit a major trading level 2 here. So yeah, reacting from here, and it should act in a minimum of 3 waves. So an A wave, a B wave, and a C wave here. So we can also look to short this as well. You could look to short it from the box up here as well, but you would only put in a smaller position in that space there as well in this case. So yeah, but like I mentioned before with this market, the real trade here was that once we get this move in here, which will also be 5 waves in here, if we can get it down to here, and then if we can see a little impulse wave to the upside here in 5 waves, then we'll have an ABC bat. Then that will give us our reference point to the upside at that point, and we will look to get a position on this side, and then we'll also start to build on the 20,000 if that's going to be the case here. If it drops below the 61.8%, well, then we'll have to start looking at short positions on the bounce when it comes back up, and we'll take it from that side. But step by step, and as I mentioned before, we didn't want to trade long in here because we knew that it would turn over, roll over, and that's what it's doing, and we just need to be a little bit patient and pick it up. But you can have a short trade in here, and it's not such a bad idea really, because if it does turn bearish, then we've already got that position in here. But if you do take the short here, then the target really is the 19,000 here, so it's just those points there. Alrighty, yeah, look, all the markets are pretty much the same, and yeah, so I just call that fear mode. So when markets are in sort of fear, they just look at each other and try and get some sort of efficiency or logic sort of happening, but they're just mirroring each other. Alrighty, cheers.